What do you love most about your space in real estate and what you do?
And I love where I'm at because I've worked really hard to get to this place to where in in the market I'm not scared. Like I don't have to worry about how many sales I'm going to have next month because of the brokerage I'm with, and then also because of the syndications that I've put together and the leveraging of my commission and making that a priority over the last decade rather than just getting sucked into just the sexiness of just slinging real estate, making sales. But the focus on, and you would agree too, I'm sure, with EXP, is that sales is the lifeblood. You have to do sales, but we're consistently leveraging our brokerage and our time and our energy, and even like being able to buy into getting shares over time, and it just automatically builds up for like passive income. That passive income is what takes the fear out of markets like this. So when you build up your passive income that duplicates what your sales income is, then you're not afraid of these times. And then you can actually leverage and double down and start taking market share um, in the sales area, and then also in multifamily acquisitions or investing, because these are going to be the times where we get super wealthy, because the people that went into syndication and didn't know what they were doing, and they just, because anybody can buy real estate, put deals together and raise money, but is it a good deal?
So let me ask you this. You talked about investing into like multifamily, and you alluded to the fact that there may be some opportunities now and in the near future. And so, what are you seeing from a market perspective in that space? And where do you expect that trend to go over the next year and say just the near future?
It's similar in the sense with single family, let's say like single family sales, like we can see that prices go up when there's lack of supply. And then prices, and like we're seeing it, there's still a supply issue, although there's more and more supply coming on the market because interest rates have gone up. So interest rates have gone up, and so that causes the time on market to sell is taking longer. So same in multifamily, when interest rates were super low, you could go out there and you could buy any property on LoopNet or MLS, and you could go in and remodel and make nicer units, raise the rents, and then refinance at a cheaper, at a 2 or 3 or 4% interest rate. The problem is you can't assume that's going to last forever. And so here we are now, is that we're in a market condition where interest rates are higher. So if you go to Fannie Mae or Freddie Mac, you're looking at maybe a 6% at the lowest for commercial. But if you go to your local bank, community bank, it's 7.5 to 8.5, you know, and maybe not a 30-year AM, it's a 25-year AM. And that's for multifamily. You know, you look at hotels or something like that, it's going to be more like 15-year amortization for like a non-flag property. Anyways, but so here's where understanding and putting in the time before these things happen, and being patient and not just jumping on every deal that came up and finding the deals. And that's one of the things that I teach you when you join our brokerage, is how to find the right deals, how to create the right deal flow, so that you're getting off market deals, especially. But what we're seeing, there's an opportunity. So there's a lot of older owners of multifamily, and I'm talking like 80 years old, and we could say 80 is the new 50, because that's how they act. They act like they're going to live forever, which is, I find it interesting, but across the board, that's kind of how they are. But they also realize, maybe I want to retire, but now the conditions have changed, so they're not going to be able to get the price that they were able to get before because interest rates were so low. So you can't sell something on a 3 cap, 4 cap, and they're trying to sell stuff at a 5 cap when you have the interest rates are 6, 7, 8. It just doesn't really work out unless you have some sort of creative way to add value. So here's where the this is what I'm seeing is, and you have sellers that, so if you can't get your price, you get your terms. And if you can't get your terms, you get your price. So we have sellers that still want their price. So I'm like, I'll give you your price, but you have to give me my terms. So there's seller financing out there. So we're working deals where we have seller financing, where we can get 5-6% interest. It may be interest only for a couple of years, and then lock it in for 5 years, because I find it interesting, but this is just the facts, what I've run into.